Waiting for rates to drop is what's killing your mortgage business. For the past few years, loan officers have been hearing the same prediction over and over and over again. Rates are going to come down soon. The market is going to loosen up. Refinances are going to return. Buyers are going to jump off the sidelines. And eventually, some of those things may happen. But if your entire business plan is based on waiting for the mortgage market to get easier, you don't have a business plan. You have a weather forecast. Some LOs have been spending the last 3 years waiting for the market to give them their business back. I'd hate to break it to you, but I'm going to. But your old business probably isn't coming back. You're going to have to build a new one. I'm Dustin Owen, and this is The D.O. Show.
They don't teach this shit in school, but they should. I'm Dustin Owen, and for the past 20 years, the mortgage industry has been my classroom. I've helped over 2,000 families become homeowners, built $1 billion mortgage operation from scratch, and earned my way into the top 1% of income earners worldwide. Along the way, I became a real estate investor, a business owner, and have invested in over 20 tech startups, even hitting a 20x return on one of my investments. This isn't theory, it's experience. Welcome to The D.O. Show, where I teach the lessons life taught me the hard way.
There are LOs right now who are looking at their production, comparing it to what they did in 2020, 2021, heck, even in 2018, 2019, and they're convincing themselves that the only thing missing is lower interest rates. They tell themselves, as soon as rates get back in the fives, I'll start closing loans again. Maybe. But what happens if rates don't get there this year? What happens if they come down a little, home prices move up, and buyers are still dealing with the same affordability problems? What happens if rates drop and every loan officer who has been sitting on the sidelines suddenly comes running back into the business? They're not going to be the only one calling those old leads. They're not going to be the only one reaching out to realtors. They're not going to be the only lender advertising for refinances. If you wait until the opportunity becomes obvious, you'll be competing with everybody else who waited for the same signal. The loan officers building momentum today aren't depending on a rate drop. They're learning how to produce in the market they actually have. That starts with accepting something that may be difficult to hear. Rates are not the only reason your business has slowed down. They may be part of it, sure. They may be a big part of it, but they're probably not the entire reason. Over the last few years, a lot of loan officers stopped doing the activities that originally built their business. The phone stopped ringing, so they blamed the market. Realtors stopped sending as many referrals, so they blamed the market. Their database wasn't producing, so they blamed the market. Meanwhile, they weren't consistently calling past clients. They weren't creating new referral relationships. Let me say that again. They weren't creating new referral relationships. They weren't following up with old leads. They weren't putting themselves in front of customers. They weren't learning how to solve the affordability problems buyers are facing today. They were waiting. And waiting can feel productive because you can always find another article, another economist, or another person on social media who agrees that the market is about to turn. But you can't deposit a forecast. The first thing loan officers need to do is stop building their sales conversion around the interest rate. If the first thing out of your mouth is the rate, you're already turning yourself into a commodity. The consumer can find rates online. They can fill out a form and get bombarded by 14 lenders before they finish eating breakfast. Your value is not your ability to repeat a number that appears on a rate sheet. Your value is your ability to understand someone's situation, identify what is preventing them from buying, and building a strategy that gives them a path forward. That could mean comparing different loan programs. It could mean helping them understand how a temporary buy down works. It could mean running the numbers on paying down debt versus putting down more money. It could mean reviewing multiple price points and showing them how taxes, insurance, HOA fees, and mortgage insurance affect the actual payment. It could mean telling them they shouldn't buy right now, then giving them a 6-month plan so they can. That's a completely different conversation than, hey, rates are still high. I'll call you when they come down. You don't need every prospect to qualify today. You need every prospect to understand that you're the person who can help them get from where they are to where they want to go. The same applies to your realtor relationships. Real estate agents are struggling with many of the same problems you are. They have buyers who are hesitant. They have listings that are sitting. They're dealing with affordability objections, payment shock, and consumers who are waiting for a crash that may never look the way they expect. Those realtors do not need another loan officer dropping off donuts and asking, do you have anyone I can pre-approve? They need somebody who can help them create business, bring them an idea for reaching renters in their database, show them how seller concessions could help move one of their listings, offer to review their old leads and identify people whose financial position may have changed, help them create content answering the questions buyers are asking right now, put together a home buyer workshop, build a follow-up plan for prospects who aren't ready today, give the realtor something they can use. When agents are deciding who gets their next referral, they're going to remember the loan officer who helped solve a problem. They're probably not going to remember the eighth lender who stopped by their office with another bag of donuts or a box of bagels, if you want to call it that. This market rewards usefulness. It also rewards consistency. You cannot have one productive Monday disappear for 4 days and then declare that prospecting doesn't work. You can't call 3 realtors, get sent to voicemail, and decide nobody wants to talk. You can't post 2 videos, get 200 views, and conclude that content is a waste of time. Building a mortgage business has always required repetition. The easier markets just did a better job of hiding it. When rates were at historic lows and refinances were falling from the sky, a loan officer could have weak systems, inconsistent follow-up, and a neglected database while still making a ton of money. The market covered up a lot of bad habits. This market doesn't. Today, the loan officer who follows up wins. The loan officer who knows their numbers wins. The loan officer who calls people back quickly wins. The loan officer who stays in touch with a prospect for 6 months instead of 6 days, they win. The LO who becomes better at explaining complicated financial decisions in simple language. Guess what? Winner. None of those require interest rates to drop. Now, I'm not telling you that market conditions don't affect production. Of course they do. When affordability improves, more people will enter the market. If rates fall enough, refinance opportunities will return. Purchase activity could increase and the entire industry may get a shot of energy. But a better market should not accelerate your business. It shouldn't be responsible for creating it. Think about what happens if rates do drop 6 or 12 months from now. Will you have a clean database filled with people you've consistently stayed in contact with? Will you have realtors who know you, trust you, and regularly invite you into their business? Will you have old pre-approvals organized and ready for follow-up? Will you have a content library that demonstrates your expertise? Will you know which past clients may benefit from refinancing, or will you wake up the morning rates fall and start looking for people to call? That work needs to happen now. Start with your database. Pull every closed client, old lead, pre-approve, a realtor partner, and professional contact you've collected. Clean up the information, organize it, then create an actual communication plan. Not one generic email every 6 months, a real plan that combines phone calls, text, emails, video, and useful market information. Call past clients and ask what has changed in their lives. Don't immediately pitch a mortgage. Find out if they got married, had a child, changed jobs, accumulated debt, started a business, or considered purchasing investment property. Call the people who didn't qualify last year. Their income may have increased, their credit may have improved, they may have paid off a car or saved more money. Call the buyers who disappeared after getting pre-approved. Don't lead with, are you still looking? Ask what caused them to pause. Was it the payment? Was it inventory? Was it uncertainty about their job? Was it the cash required for closing? Once you know the real objection, you can help them work through it. Then look at your daily activities. How many real conversations are you having every day? How many new referral partners are you approaching every week? How many people in your database are receiving personal follow-up? How many applications are you taking? How many pre-approved buyers are out there looking? How many hours are you spending creating opportunities versus reacting to whatever just happens to, show up? Those numbers will tell you far more about the future of your business than a headline predicting where rates might go. One of the biggest mistakes an originator can make is allowing current production to determine current activity. When business is slow, they get discouraged and work less. It's the opposite. That produces fewer opportunities, which makes business even slower. Then they use the lack of production as proof that nothing is working. You have to reverse that cycle. Activity comes first, conversations come next, opportunities follow. Then production shows up. There's a delay between doing the work and getting paid for it. That delay is where a lot of loan officers quit. They make calls for 1 week and expect a closing. They attend one networking event and expect a new referral partner. They send one email and expect applications. Mortgage sales doesn't usually work like that. They're building trust around one of the largest financial decisions someone's ever going to make. That trust is built through repeated, useful contact. The good news is that a lot of your competition isn't willing to do it. Some have already left the business. Others are still licensed but barely active. Plenty are sitting around waiting for rates to rescue them. That creates an opening for you. You can spend this market becoming more visible, more knowledgeable, and more connected. You can build relationships that would have been much harder to win when everybody was busy. You can create the systems you wish you had during the last boom. Then, when the market does improve, you won't be starting over. You'll already be moving. So stop asking when the old market is coming back. Ask yourself, what kind of mortgage business are you building right now? Is it a business that only works when money is historically cheap? Or is it a business built on relationships, follow-up, skill, consistency, and the ability to help people make smart decisions in any environment? Rates may eventually give the industry a boost. Just don't sit around expecting them to save you. If you're ready to stop waiting on the market and start building a repeatable mortgage business, T-Lop's Originator Coaching can help. This isn't about handing you another motivational speech or a script you'll use twice and forget about. It's about building the habits, giving you the accountability, along with the systems and business development strategies you need to produce consistently. Visit tloponline.com and browse a variety of coaching programs to level up your mortgage business. I'm Dustin Owen, and this was The D.O. Show.